Following the rise in food and energy prices, the International Monetary Fund has projected that Nigeria's inflation figure will rise between 18 and 22% in 2022. While the IMF in its 2022 Regional Economic Outlook for Sub Saharan Africa disclosed that the outlook is challenged by high food and energy prices, spending pressures within narrow fiscal space, persistent insecurity, particularly banditry and kidnapping, and election risk. However, in a bid to tame inflationary pressure arising from insecurity and Russia-Ukraine crisis affecting the supply chain, with an anticipated high electioneering spending as Nigeria approaches an election year, the Central Bank of Nigeria in its last monetary policy raised the interest rate by 150 basis points. What impact will this have really on the entire economic space? Well, let's understand this. Being joined live by the Chief Executive Officer of Carry Assets Management Limited, Mr. Johnson Chukwu. Good afternoon, sir. It's good to see you.
Good afternoon, Tolu, and thank you for having me.
Yes. Before I move straight into IMF's projection, 150 basis points is what the CBN added to our NPR from 11.5% to 13%. Now, Mr. Chukwu, was that what you were expecting? Some say this looks too aggressive or sounds aggressive, whichever way you want me to put it. But were you expecting them to move that much?
No, I wasn't. It was quite aggressive, like many people have said. The reasons why I didn't expect them to move that fast or that high is because the pressures we're having, the inflationary pressure we're having is not a liquidity-induced inflation. It's not as a result of consumption or demand. It's basically a supply-driven inflationary pressure. And because if you contract the level of liquidity in the economy, you are not likely going to take away the supply, the demand that is there. Because the demand is not induced by liquidity. What we are dealing with is because we have shortfall in supply. We have issues with supply of some critical food items or food inputs coming from Ukraine and Russia. We have supply shortfalls coming from our local production as a result of insecurity across the country. So if it is a demand-induced inflation, so you say let's apply the pressure by tightening liquidity and increasing the lending cost, and that will slow down on consumption or demand. But it's not a factor driving that. So I felt an increase of 150 basis points was quite steep, and whether it will actually address the peculiar situation we have in the country still is left to be seen.
How long do we wait for us to understand or to start to feel the impact of this move by the Apex Bank, Mr. Johnson?
It's going to come very soon. We're already seeing banks trying to increase their lending rate to what they consider as non-critical sectors of the economy. And so one of those sectors is trade. And trade, as you know, accounts for about the third largest contributor to the economy. So if you slow down trade activities, you're going to have impact on employment and some other sectors of the economy, other critical components of the macroeconomic variables. So we have seen banks are trying to increase interest rates and lending rate to their customers, and that will lead to a slowdown in economic growth. We're already seeing a gradual tapering of economic growth rate. If you look back at this quarterly growth rate we recorded the past 3 or 4 quarters, if you recall, the second quarter of last year, 2021, the GDP grew by 5.01%. It slowed to 4.03% in the third quarter, and then grew by 3.98%, which is a further slowdown from the 4.03% in the fourth quarter. And then in the first quarter of this year, it grew by 3.11%. So we're seeing a consistent tapering of the growth rate. And by applying the brakes and increasing the lending rate, what it will lead is a cost push pressure. So you're going to see the input cost for most businesses will go up for those who are borrowing customers. And that may not easily be passed on to consumers. So you're going to see a further slowdown in the rate of growth of the economy.
The rise in price of food and energy prices, which has like almost doubled even in the UK and everywhere, and we know what's happening down here in Nigeria too, the price of diesel and all of that, it's a global issue. It's not limited to just Nigeria. But IMF is saying that our inflation rate could hit 18 to 22% because of the situation. What is so different about us?
Well, the thing different about us, maybe I would say, is the fact that we also have a domestically induced inflationary pressure as a result of a heightening level of insecurity in most parts of the country that is slowing down food production. And we're seeing a food inflation at one of the highest we've seen in the recent past. But beyond that, the inflation rate we're even witnessing today is muted. When I say muted, because we are not really feeling the full impact of the Russian-Ukrainian war. And the reason is this. If you look at the price of refined petroleum products, globally, we've seen the price of fuel hit the roof. Today, we still have a fuel price at the pump head of about 165 naira per liter. And elsewhere, if you compare that to the price of diesel, I understand the price of diesel is approaching about 700 naira per liter. So if, for instance, the price of PMS or fuel had gotten to anywhere maybe 300 or 400 naira per liter, then the rate of inflation we're dealing with would have been far above the 16.8%, 82% we saw in the month of May. So we're even enjoying a muted level of inflation because fuel price, which is one of the major factors driving up global inflation, is regulated. And fuel price is subsidized in the country. And therefore, the federal government is absorbing the differential in the landing cost of fuel and the pump price of fuel. But then, be that as it may, we also have to pass on the cost of diesel. Diesel has moved from in the 600 region to about 700 naira region. We also see in the price of aviation fuel, which is leading to repricing of tickets, air flight tickets, to about ATK or dual purpose kerosene, which is aviation fuel, about 700 naira to a liter. This will have further impact in the price of goods and services because the critical component or the energy source that is used, for instance, fuel is the energy source that is used to drive most transport vehicles. And that will be passed on to the cost of goods that are moved around. And then we're also not seeing the situation, the insecurity in the north abate. We're rather seeing worsening and spreading down to the south. So that will further constrain food production. And these are pressures that will lead to higher inflation rates in the coming months.
Great stuff there, Mr. Johnson Chukwu. Oh, this is the big elephant in the cupboard now. To me, I see that 45 trillion naira is the projection that our debt might get to. About 38% higher than what we have now is what our IMF is also projecting for Nigeria. This is scary considering our level of debt servicing that is really worrisome even at the moment. How does this come to you?
Well, it doesn't come to me as a surprise. If we don't do the heavy lifting, the restructure of the economy as we know, and we continue with the current practice, we're going to continue to accumulate debt. Let me just point to you to the federal government initially budgeted about 435 or so billion, less than 450 billion for fuel subsidy at the beginning of the year. Subsequently decided they're not going to take out the subsidy, and then they needed to increase the fuel subsidies by about 3 trillion. So we now had about 3.5 trillion provision for subsidy. Today, IMF is saying that we're currently spending about 500 billion every month on fuel subsidy, which means we're going to end up with about 6 trillion naira, which means the government could borrow at the minimum additional 1.5 trillion naira to fund subsidy payment, added to about 10 trillion naira that was budgeted earlier as deficit. So that additional borrowing will add up to the debt service, because once you borrow additionally, you have to pay interest on it. And as it stands today, while our fiscal balance is no way around the corner, we are still accumulating higher expenditure level compared to our revenues, which is unfortunately dwindling at the period when it should be increasing. So if you continue to have a huge budget deficit year in, year out, and then you have to borrow to fund that budget deficit, your debt profile will increase, your interest payment obligation will increase, and that's why IMF is also projecting that we could get to a point where our interest payment is about 100% of our government revenue, and we're not too far from there.
Very, very interesting one again. There, another thing in that report, because we're staying so much with this report, is that they are saying that Nigeria should prioritize debt, which we just talked about, inflation, growth, and the foreign exchange management. Mr. Johnson, as the information we have is that at the moment, at the order market, the Naira exchanges to the greenback for more than 600 Naira, with all of the efforts being made by the Central Bank of Nigeria. Almost all topics we've discussed this week, we've had one issue or the other to talk about the Forex market. What do you make of all of these efforts aimed at bridging this gap? Is it really working?
Well, it's not working because we're not addressing the fundamental issue. And this is the fact. Today, as of yesterday, crude price had gone to $125 per barrel. We are a crude producing country, but unfortunately our crude production keeps declining. I think we're producing less than 1.44 million barrels a day today. Instead of producing the budget was predicated on about 1.8 million or so barrels per day. Ideally, this country used to produce as much as 2.2 million barrels per day, which should be increasing, not decreasing. And what that means, I think I saw the minister also say that, look, we are barely earning enough foreign exchange to cover the cost of oil importation. And why is it so? Because we have not addressed the fundamental issue, which is we need to address the issue of restiveness in the Niger Delta. We need to win the hearts of people there. We need to bring development into that area. We need to lift more people out of poverty. We need to really look at the fiscal framework, the societal issues around crude production. The story in the oil industry today is that the level of reconciliation, what they call reconciliation, is just about 10 to 20%. What that means that if you pump 100 barrels of crude into a pipeline, you get between 10 and 20 barrels at the export terminal. And that's why many foreign international oil companies are leaving the onshore and shallow offshore assets and going only deep shore. So we need to address that so that as to improve our crude production. If we don't do that, our foreign exchange earning is not going to change in the near future. And as long as we don't earn more foreign exchange, our Naira will continue to depreciate. All the major foreign exchange earning sources of the country are declining. Your earnings from international trade, your balance of payment is negative because your earnings from sale of crude is declining. Your diaspora remittances is declining. Your foreign capital importation is declining, coming in the form of foreign portfolio investment, foreign direct investment are all declining. So on all the heads, our foreign exchange earning is declining, and you cannot but continue to import certain minimum level of goods and services from other countries because of your population. So your balance of trade will continue to remain in deficit, and as long as that continues, your reserve will be eroded, and your exchange will continue to be under pressure, and your currency will depreciate.
This will, many of these issues will definitely affect the outlook. Clearly, moving on, Mr. Johnson Chukwu, when we're even looking at some downside, there's still COVID-19 vaccination issues, monetary rate tightening that we've seen, and investment issues because it's not flowing as it would flow. With all of this, what are you thinking with regards to the outlook for 2022?
Well, 2022 will remain a largely politically dominated year because, of course, the parties are running up their primaries. The next thing is you're going to go into electioneering campaigns. So which means that focus of the government will move away from economic policies and focus more on winning elections. And again, some of the critical and defining policy changes that you need to implement to redirect and restructure the economy cannot take place. So you're going to be business as usual for the remaining part of the year, and that will mean that the economic outlook of the country will continue to deteriorate in the current year. I've talked about the declining GDP growth rate. I've talked about the depreciating currency. I've talked about the declining foreign exchange earnings. And these are all these things will dovetail into higher level of unemployment. Of course, unemployment could largely be moderated when more people are engaged in political activity. So you're going to have a reduction in unemployment, but you an increase in underemployment because those people will be underemployed, but they will be engaged. But beyond that, I think most of the parameters are looking southwards.
Before I let you go, Mr. Johnson Chukwu, food. When you talk about food security, everyone is worried, and we see the AFDB and the Central Bank of Nigeria lately trying to support this. Particularly, I think there's funds made available for farmers to cultivate wheat, rice, maize, and all of that to at least bridge this gap. Do you think that this will feel the impact of all of these interventions? Even the NSIA is saying that we should be expecting fertilizer in anytime from now from Russia.
Yeah, Tolu, between you and I, or between you and I and Nigerians, unfortunately, this well-intended effort by the central bank, the Nigerian Sovereign Investment Authority, and other agencies of government to improve on agricultural production is not yielding the desired results. The simple reason that if you provide all the inputs, if you provide all the credits, and you provide the fertilizers and every other relevant input, and the farmers can go to farm, there is no way they will produce. So we're dealing with existential issues around the farming activities. Most farmers in places like Zamfara State have to pay taxes to go to the farms, and that does not guarantee that they will not be kidnapped while they're in their farms. And that is gradually spreading over to several other states of the country. So if the farmers are not safe in their farms, all these efforts dovetail into minimal benefit, which is why if you look at the GDP of the agriculture sector, GDP growth of agriculture, it has continued to decline. We are seeing quarter-on-quarter decline in agricultural GDP. And that's, agricultural GDP growth rate. And that is a proof of the fact that these intervention measures, as well intended as they are, as altruistic as they are not having effect because they have been trumped. They have been trumped by insecurity.
Well, it's really worrisome, and as we move towards the elections in 2023, that's where many even think that governance might just shift to politicking. That's part of the issues we had with the subsidy removal, that many say it's more political than economical. Now we have a country where we are paying almost, the report I saw today, almost 6 trillion naira would be paid with regards to subsidy, while the price of crude also continues to go high, and we are not meeting up with OPEC's quota. Where do we stand in all of this as we wrap up this segment of the show?
Well, it's a situation, like I said, which you and I have actually echoed, that we will see continuous shift in government attention from economic to political consideration.
Honestly. Go ahead, sir.
Things, then we should not expect to see any changes. We all have to bear in period of 1 year through this current situation, and expect that when a new government comes into place, and then we'll begin to see those reforms that this economy badly requires.
Those reforms, we need to see them as soon as we can. Thank you so much, Mr. Johnson Chukwu. It's always interesting talking to you. CEO, Cowrie Asset Management Limited. I do enjoy the rest of your day. Good afternoon.
My pleasure.